All right, good morning, good morning. Thank you guys so much for tuning into today's live stream. It is June 25th, 2025. To take a look at the economic calendar here for today, we have Fed Jerome Powell's testifying here at 9 a.m. Central Time, and new home sales are going to be released at 9 a.m. as well. You don't really see a high. I guess let's see here. So it seems that home sales or new homes are usually bought within like the summer time, summer to spring. Yeah, it looks like it starts to ramp up leading into the spring, leading into summer, and then slows down coming into the winter seasons. Let's see. So let's see here. New home sales are it's a good indicator of where the real estate market is, right? There's a lot of supply compared to demand, which is causing home prices to go down. According to an article on Wall Street Journal, I did read that some of the homes right now in specific locations such as Austin, Cape Floral, Florida, the home prices now are less than what the mortgage is in total, right? So they put down a down payment on it, and that mortgage that they have to pay off to the banks is more than the actual home price. And I think that's kind of that's interesting. I mean, I think there's less buyers now too, due to just the high mortgage rates. I think mortgage rates are at like 7% right now. Yeah, let's see here. So mortgage rates right now are around like 7%, 7-ish percent. That's pretty high compared to, let's see, if I were to take a look at, like in 2021 during COVID, mortgage rates were about 2%, right? And over over the span of October 2021 to October 2022, mortgage rates spiked from almost 2.5 to 5. That's like a double in mortgage rates, which isn't necessarily, which is not a good thing at all, right? And these high mortgage rates are, that's gonna cause the whole mortgage market just crumble almost. Why would buyers want to buy a house, with these high of mortgage rates right now? That's basically that's essentially the economic news for today. Nothing really too exciting. To dive into the actual technicals here for today, let's take a look at the daily time frame. So the daily candle from yesterday here, right here, suggested to me that we were most likely going to take out the daily high. So this daily candle here, right, with the way that we closed, to me, it appears that we are most likely going to take out the daily high, just simply based off of its closure, right? I'm not going to do anything based off of this knowledge, unless there's more like confluences. But simply looking based off of the daily time frame, I can anticipate that we should most likely take out the daily high. Another way of looking at this objectively is how close is the closure to the low and the high. So let's take a look at this. Is that blue line, objectively looking at it, right? Is the blue line closer to the green line, or is it closer to the red line? That's like the easiest way that you can take a look at. That's the easiest way that you can interpret this. And to me, it's clear that we should most likely take out the daily high, right? The closure is a lot closer. The closure of the daily candle is a lot closer to the daily high than the daily low. And so my objective coming into today was bullish. I'm bullish for today, right? I want to see us take out daily high, and after we take out the daily high, I don't necessarily have a bias. And yeah, so it looks like during the London session, we did end up taking out the daily high here. So we rebalanced into this 4-hour fair value gap right here. And you know, we rebalanced into the inefficiency, and then we started to expand higher. That would have been a good entry, right? But the thing is, there are 3 things that I look for before I really execute. And yeah, so coming into the morning session now, because I can't utilize the daily time frame, my best bet is to utilize the intraday time frames, right? So I'm going to utilize the 4-hour, I'm going to utilize the 8-hour, depending on how those two candles closes will give me a morning objective, right? Every single candle has an objective. You can apply the same concepts of targeting the high or the low to the 4-hour time frame, the 8-hour time frame, the 1-hour time frame, the 15-minute time frame. Price is fractal, and so you can utilize that to your advantage, right? And yeah, so that's kind of what I'm aiming for, or that's kind of what my game plan is for the morning session. I do want to take a look at something first, however. So yeah, we're relatively close to all-time highs again. Yeah, so we are pretty close to all-time highs. Let's see. Let's take a look at the 12-month candle. Here, based off of this 12-month candle here, to me, I think we have already for sure made the low of the year. Coming just based off of this candle, like I can anticipate that we have already made the high of the year. For now, so the 6-month candle is about to close in about 5 days, and based off of the 6-month candle, I can anticipate that we should most likely take out that 6-month high. And let's take a look at, so that blue line is the 6-month high. Let's zoom into the weekly time frame here. So that, keep in mind that blue line is a 6-month high, and so I want to take a look at the other monthly time frames, such as the 3-month and the monthly here. And so it appears to me that the 3-month time frame right now, which is that red line, is different than the 6-month high for right now. And so this could end up leading to a setup, right, where the 6-month candle, once it closes, that will give me an objective of us taking out the 6-month high. And that higher time frame objective could be aligned with a 3-month candle, because notice how the 3-month high is different than the 6-month high. And so this kind of gives you a framework of where, hey, I can utilize the 3-month candle to target the 6-month objective, right? That's good utilization of time frames. You're going proportionately down into different time frames, right? So 6-month high, you're going onto this 3-month candle here, and from the 3-month time frame, I noticed that, hey, the 3-month high is the same high as the monthly high. And so this allows you to scope. Instead of framing your model based off of the 3-month candle, you can actually base it off of the monthly candle, because the monthly candle, its high is the same high as the 3-month high for right now. And so from here, I would probably like to take a look at these other time frames here as well. And yeah, so the weekly candle is also the weekly candle's high is the same high as the monthly high for right now. It's only Wednesday, so I don't want to make too much of an assumption, but yeah, so that's something that I do want to keep in mind for right now. There's a possible setup, but it kind of depends on how we close. That's something I'm looking pretty closely at. And I think for right now, that's going to be it for, I guess, the analysis, the morning analysis. I think it's a good time for me to get into the pros and cons. We have about 20 minutes left until the 4-hour candle closure and the 8-hour candle closure. Before then, let's dive into some of the pros and cons. Let's just keep that thought in mind for right now. Alright, so going into the pros and cons for this week, the first thing that I want to mention and I guess go over is to remain consistent. Take consistent setups, right? There's 3 components that I always look for before I press the button, and that is a higher time frame objective, a model, and a entry pattern. Those are the 3 things that I look for before I execute. These concepts could be applied to any time frame. My entry pattern, it's always going to be a fair value gap, and fair value gaps are created in every single time frame. This daily time frame, this 4-hour time frame, the hourly time frame, the weekly time frame. Fair value gaps are created on every single time frame. Same application of the higher time frame objective. There's higher time frames could be based off of the weekly, could be based off of the daily, but I say higher time frame, but it could be treated on almost every single time frame. It's your model that kind of allows your higher time frame to be named the higher time frame objective, right? Your model should be on a lower time frame relative to the higher time frame, and it should align with that order flow. So if the higher time frame objective is telling you that, hey, we should take out this 4-hour high, then your model could be based off of the 1 hour, and the 1 hour should also be suggesting bullish setups, right? It should be bullish. If the higher time frame objective is bullish, then your model, how you're aligning yourself with that, should also be bullish, and your entry pattern should be a entry pattern that supports the idea of higher prices. Why would you take a setup where the higher time frame objective, the model is suggesting higher prices, but the entry pattern is supporting lower prices, right? That doesn't make any sense. And the second thing that I do want to cover is to make sure the fair value gap that you use can be treated as a fair value gap. And this just goes back to the idea that there are going to be fair value gaps of many sorts. There's a breakaway gap, and there's a fair value gap that can be rebalanced. Like the fair value gap coming into today that was used to push prices higher right here. This fair value gap is a fair value gap that could be rebalanced, meaning it is possible for us to rebalance into it. If it was a breakaway gap, then this gap wouldn't even have been filled at all. It would have been just, prices would have just gone straight up, right? Breakaway gaps means that there is no opportunity for us to rebalance. It's strong, momentum is strong, and we should just go straight up instead of rebalancing the inefficiency. But coming into this specific fair value gap, notice how the candle's closure, which is that red line, is below the blue line. The fact that we closed below the second candle's high allows me to treat this gap as a gap that gets rebalanced instead of me treating it as a breakaway gap. It allows for objectivity, right? There's a lot of subjective there's a lot of subjective theories sometimes, and I like being able to see things where 1 + 1 is always going to be 2. 2 + 2 is always going to be 4, right? And this objectivity is what I like to see here. The fact that we closed below the second candle's high means that I can treat this fair value gap as a gap that gets rebalanced. And let's see here. Let me try to see if there's, so this could be treated as a breakaway gap. You see, notice how the candle's closing, the third candle's closing price is above the second candle's high. So notice how the red line is above the blue line. That allows for prices to treat this as a breakaway gap. It's more probable that we should treat this as a breakaway gap. And so that's essentially what breakaway gaps and fair value gaps that gets rebalanced. That's kind of the differences between the two. Third is knowing when to pivot. I kind of gave a brief explanation of how to pivot coming into the morning session today, or coming to today in general. Notice how the fact that I couldn't utilize the daily time frame meant that I had to pivot. I had to pivot from utilizing the daily time frame onto possibly the 4-hour time frame, possibly the 8-hour time frame. Because the fact that time frames are fractal, then that means I can utilize different time frames, right? So if I were to not be able to use the 4-hour time frame coming into the morning session today, as well as the daily, I would simply pivot onto the hourly time frame. If I can't use the hourly time frame, then I would pivot it. Thank God. But yeah, I would pivot from the 4-hour onto the hourly time frame. And if I can't use the hourly time frame, then I would pivot onto the 15-minute time frame. So that allows me to, be present for more setups, right? Because I'm not simply so zoomed in onto just one. I'm not simply so zoomed in into one approach, and I'm utilizing multiple time frames to my advantage, right? And yeah, so that's pivoting. The last thing here is to pay close attention to SMT. SMT is essentially you watching for any manipulations in the markets, right? And for me, I'm watching really closely the relationship between NQ and ES right now, because I want to see if ES is going to take out, or should take out, this, I guess, yearly high as NQ. And SMT, this SMT occurs on every single time frame here as well. SMT can occur on the 4-hour time frame. It can occur on the 15-minute time frame. It can occur on the daily time frame. It's fractal. And yeah, so the key takeaway from SMT is if there is SMT, then that means there is a possible reversal. But if there is no SMT, then it's higher chances of a continuation. It's possible that we should continue in that specific direction if there is no SMT. And that's essentially all of the pros. Some of the cons are just some like risk to reward structures. There's really no point in me going over it because your risk to reward might be different than mine. But yeah, so to really sum things up, the first thing is to remain consistent. That means I have to be able to identify a higher time frame objective, a model, and an entry pattern before executing. Second, pay close attention to SMT and the relationship between NQ and ES at specific highs, right? And lows, specific highs and lows. I think SMT is a major confluence to the way that I approach setups, right? Before my trades, I'm watching closely between the relationship between NQ and ES. And during my trade, I'm watching SMT even closely. If ES ends up taking out the target high relative to NQ, and NQ didn't take out that high, then that allows me to have the understanding that, hey, because ES has taken out the high and NQ hasn't, that allows for a possible reversal. And if the possibility of us reversing increases, then I'm going to move my stops or break even. It's very simple, and that's kind of the way that I would approach it. Third, just to be relaxed, patient. I don't necessarily want to force things to happen. I think I've gotten a lot better at doing so. I think the older version of me, I guess the past me, I would have executed on the fact that, hey, this daily candle here closed bullish. I should take this entry right here. I mean, even though it turned out positive, the fact that I didn't have a model is kind of why I wouldn't have taken this, right? The fact that I didn't have, or I can't really identify a higher time frame objective, a model, and an entry pattern. Well, I kind of know what the entry pattern would have been. I know what the model would have been, But the higher time frame objective, the bigger reason why prices wants to go higher, there is no higher reason, right? And so that kind of prevents me from really forcing anything to happen. And so yeah, and I think that's gonna really sum it up for today's live stream. I have to be somewhere at 9 a.m. today, so yeah, the best thing I guess the final thing that I want to leave you guys with here is watch closely between the relationship of, or watch closely on how we close on the 4-hour candle and the 8-hour candle. Depending on how those two candles close will give you a morning objective, right? If we can close bullish on the 4-hour time frame and the 8-hour time frame, then I would target the 8-hour and the 4-hour high. But if we close bearish, then I would be targeting the 4-hour low and the 8-hour low. That's kind of how I would approach it today. Yeah, those two candles close in about 4 minutes or so, but I gotta go somewhere now. Thank you guys so much for tuning in to today's live stream.